release. So that's why I'm here today, of course. So I'm gonna just quickly can see perfect. Like, whoops. Okay. So, guys, this is your session once again. Ask me for anything you want before I start analyzing the market. I start reply to your questions. You will allow me a few minutes to go through what we expected in just 7 minutes from now. Okay. And then we're gonna sit together, obviously the release and how it's affecting dollar, stock markets, yields, metals. The week was definitely a memorable one so far. So yeah, so very quickly. Okay, very quickly. I have prepared my setup as well. So very quickly, let me say what we are expecting. So have in mind that there is, considering the data from the data that we have seen from August in general so far, we have seen that the jobs, okay, the jobs today, if we consider the ADP number, if we consider the weekly jobless claims, the initial claims as well, there is that we are expecting, and the market is widely expecting, that the jobs today will show a slowdown. Let's say, okay, they will show a slowdown. However, we keep having surprises this year from jobs. So that will be the key, along with the wages, of course. But what is expected, what is expected for the day is to have 170,000, 170. Reuters, they raised their forecast to 177,000 non-farm payrolls. Why the average wages is expected to slow down a bit. Okay, so this is what it is expected. To be honest, the attention is once again on the wages, on the average wages, hourly wages for the year, the headline, but also the uh, uh, the monthly rating as well. So even though initial and continued claims remain tight in August, with, as you already know, consumer confidence also falling significantly, producer sentiment also weak. Okay, uh, that should show at least a sign, if not like a significant mist of data today, at least a slowdown of the so far pretty solid and tight labor market in the US. So jobs growth in US so far has outpaced the GDP path since 2021. So more than 2 years now. So yeah, the risk for payrolls is once again is downwards. But will this happen? This is the key. So let me check whether you have any questions so far. Silver go up, down. Yeah, metals are driving crazy. I'm watching my gold euro, obviously gold against dollar, but also gold euro. Copper was to the upside today. It has been for the last 2 weeks, but it broke a significant 200-day moving average. Stocks also interesting, obviously dollar, but yeah, it's not only dollar and stocks, it's also the safe haven of the safety of gold, dollar, potential weakness. But yeah we need to wait and see. So I'm gonna start sharing my graph as well, my charts. Okay, and since you keep asking about metals, this time I'm gonna do it by reverse and not starting with the with dollar, but sharing gold. Why not gold? I will put, guys, the 15 minutes chart just to see how it's affected. I would also like to have the calendar as well. Okay. Just give me a second. Yes, yes, guys, you keep writing, you keep posting about gold. I know. Uh, where's my? But we're just 3 minutes away, so I'll share the calendar. Gold presents a significant rally so far today, extending at 1945. But wait a bit, there's a lot of market noise. Let's wait for the data. Can I do it side by side? Can I add a third one? Add another source. Can I? Can I? Can I? No, apparently I can't. How can I do that? Okay, you know what? Entire screen, yes, this one, and I'm gonna drag and drop my calendar over here so we can see gold's reactions and obviously dollar's reaction uh, on the data. So, as I was saying, gold extended higher, retested once again the 1946 territory. There's a nice smooth rally as you can see. This is a 15 minutes chart, okay? Data should be out in a minute, in less than a minute, and keep watching my my newsfeed as well, just for instant announcements. Where's my? Okay, let's wait and see. Bloomberg is still not updating anything, so yeah. Someone mentioned a dollar. Dollar remains a bit steady. Obviously, we're just less than a minute away. So let me see. Let me refresh. Awaiting U.S. payrolls. Bloomberg is saying, let's wait a bit and see what actually. Okay. Okay. Perfect. Perfect. This is gold, guys. Can you see this reaction? Data are out. Let's check them. Gold is like 1949 already. Can you see all this? Let me double check. Yes, you can. Boosting higher. Let's see what happened. Big expectations once again. 187,000 out of from 170,000 that was expected. Average hourly earnings dip and growth not 0.2%. Oh my god, and a revision way lower. Can you see this? The July's reading was revised lower at 157,000 from 187,000 that was seen on in July. Hourly earnings, monthly reading, a headline also slowed down, less than expected, participation rate slightly higher, unemployment increased. That might be what the Fed wanted actually. Oh my God. 1952.70 already for gold. Let me see. So what that means, guys, that means that we have, even though the non-farm payrolls actually grow, so beat expectations, the fact that average hourly earnings decline slightly, but still a slowdown, and the fact that July's reading revised lower, that might be something that is just adding to the Fed's that's actually a sign. Okay, that's actually a sign that the labor market in the US finally showing some kind of a slowdown, a bit, but still a slowdown. So we're waiting and see how the markets will interpret this reading. Indeed, the NFP beat expectations, but as far as I can see, the revision lower for July, and more precisely, the unemployment rate and the average hourly earnings should dominate the interest. Um, it's a very notable breakdown, especially the jump in the unemployment and the average hourly earnings. The There should be the focus. It was anyway on the average hourly earnings, um, and this is the initial reaction, as you can see over here, was to see dollar moving lower along with the treasury yields. And I'm guessing the dollar again as well. Let's have a look, a quick look on dollar index. Yes, indeed, 103.20 below the pivot point. Big dive that was alongside with the treasury yields. Dollar yen should spike some. Um, where is it? Yen is a safe haven. What is going on? Okay, not a significant movement, a bit muted one. Oh, sorry, this is a daily chart. That's why. 144.73 already breached and broken the second support of the day, down by more than 0.5%. That's the dollar again. What I'm presenting is let me just, this is a 15-minute chart. I put the 15-minute chart from now onwards. I'm gonna use the 15-minute chart for all the assets just to see the initial reaction from the NFP guys. Okay, let me tracking payrolls for 37 reflecting a slowdown in the U.S. labor market. Finally, I'm trying to keep an eye on the Bloomberg headlines. I'm sorry for that. If you're watching my the 0.3% lower for DAX for Dow for dollar. Sorry, currently. Anything that anything that I'm missing. So I've get rid of that confirms the end of the dollar season. Is looking likely, my dear Get Pump. You're absolutely right. I mean, this is just a confirmation. This is what we were waiting for. Actually, it's not what we were waiting for. If we consider the consumer confidence, the producer sentiment, the inflation reading, the so far weekly claims, the PCE, all these they were actually leading to this to the pose of tightening, but this is actually confirms it. And remember, as I keep saying, and for everyone that followed me yesterday on Instagram, markets are always ahead on themselves. So this might finally. Let me just put the daily chart on. This might bring down dollar to the levels that we have seen, the low levels that we have seen in the first quarter or even second quarter of the year. Okay, I can see your comments. Okay, so very interesting. Very interesting. I prefer to be interesting than a doji one. So this is the dollar index. Let's move on to dollar index. Back to dollar index. I'm gonna put the 15-minute chart. This is a 15-minute chart dollar index, and the reason why I put that on is just to see whether this dip will prevail. Theoretically, this data they just, as we keep saying, it's not so much the NFP number, but it's the wages, it's the unemployment, and the revised lower of the NFP back in July. So the fact that even though we haven't again in August, so beating expectations, the fact that the latest reading was revised lower, and finally wages are showing slowdown, employment is increasing, is just confirming that Fed is posing the tightening, or should pose a tightening at least. I mean, so it is what it is. It is what it is. Nonetheless, the initial reaction has attracted a lot of sellers, as you can see. So let's see what's next for the dollar index. Obviously, you need to wait a bit for the candle to close. I don't know your kind of trader you are, but yeah, dive significantly, broken this immediate support level. This is a 15 minutes chart. The momentum indicators are just sharply down. You can see stochastic over here. You can see, can you? Yes, you can. So you can see that there's a sharp decline with further steam to the downside. My short-term MACD already turned negative. Let me simplify this chart. Yeah, the RSI dove already 27. There is further steam to the downside as well. How can I read the candlesticks? Check the body of the candles once they are closed. Okay, once they are closed. So this is still running. Okay, I'll not check this. Okay, I saw that it retested a new low. It broke the previous, but it's not closed yet. Okay, so the body of the candles, the size of the body of the candles, also the tails, where we had a bit of a fight between bulls and bears. Okay, so it's a whole session there at the Gule. So I advise you to have a look on the past webinars that we have provided. Everything is on the YouTube channel. Everything is on the past webinar page in our website, so you can find dedicated webinars for candlesticks from the very beginning and intermediate into more advanced ones. So okay, we had some Canadian data as well. Before I just start analyzing, it would be good to check this as well, because we are getting the same picture from Canada as well. So another data that indicates and supporting a rate post from Canada as well. So we have the final GDP number from for the second quarter of the year. Canadian economy slows down. Monthly reading contracted 0.2%, annualized the same. So it's also the Canadian economy is just support. The Canadian data also support a pause of the rate of the interest rate. So yeah. So let's get back. Okay, I will take the questions one by one. Okay, one by one. I just noticed that there was no. He'll push. Okay, so I'm gonna start with gold and silver, obviously. Okay, let's do this. It was a huge spike of gold, obviously, 1953. And if I put the daily chart, I will jump from the 15 minutes I have jumped to the daily chart just to show you that this boost it indicates the breakdown of the breakout of 1 month's highs. You see, this is 1 month's highs. The 1948 is 1 month's highs. Something is wrong. Okay. Okay, so guys, it will really help me if also you have a particular time frame that you want me to analyze. Otherwise, I will do what I always do, from the top to bottom and vice versa. What's Bloomberg saying? Yes. Okay. nothing new. It's what we discussed. So that's the 1 hour. Actually, let me just. This candle was about to close in 3 minutes from now. This is a 15 minutes chart. Put that. Here we are. You can see that it spiked above the first resistance of the day, broken 1950. However, key question will be whether it will sustain a move above 1950. So that will be the interesting part of it. In the meantime, you need to be aware that if it keeps this boost to the upside, then the next resistance levels to be watched will be back in July highs. So for the day, key resistance remains at 1954, immediate resistance for anyone of you that you are intraday traders, obviously. Okay, 1954. But you see, it was outside. So it seems that there were some pending orders over here. Some pending orders at 1948, expecting for the NFP release and boosted and open and triggered once the gold breached 1948.50. Support remains at the low of the day at 1937. We're just a minute away from the closing of this candle in the 15 minutes chart, but look at that. Intraday, as I said, 1953 remains the next resistance level for gold. However, if that area has been breached and we see the gold extending higher, okay, then for day traders, attention, guys, to 1960, 1973, or even 1982. As I explained, when was it? Was it last week or was yesterday? Yesterday was in Instagram Live. Guys, in general, both technicals and fundamentals are looking to support metals, and more precisely gold, which, as you know, is used for hedging against inflation. It's a safe haven as well. So the overall outlook for gold remains positive. Why is that? Other than the fact that a lot of buying the dip, movements have been seen over here down when it actually moved below the 1900s territory. Also, fundamentals and in general, any speculations, any scenarios that we breach the end of the tightening circles. From now on, the Fed will pause and it might proceed with cuts with the new year. All these and any slowdown signals that we keep having from inflation as well. All these support the goals, and their attention for the medium term has turned to the 2000 territory. For the time being, look at that. Actually, it's too messy. I'm gonna use. Okay, here it is. Okay, let me double check the exponential, and I'm gonna use my. This is a daily chart, okay. And the asset, as you can see today, after retesting for 2 days in a row, the 61.8 level, it has broken the 61.8 Fibonacci level. Obviously, the day is not over. However, have in mind tonight, or keep an eye on it during the day, if we have consecutive candles confirming that 61.8 Fibonacci level has broken and the asset is keep moving higher, that is opening the doors to 1970, 1990, or even potentially to 2000 territory. That's for the medium term, okay? Medium term, not for the day, obviously. I'm in a daily chart. But I wanted to show you that because you can clearly see the momentum rising. Look at the body of these candles. Huge sideways consolidation, a bit of a correction, boom, boom, a bit of a correction ahead of the data, boom, we need to wait and see, however, for this latest one to close tonight. But it's not only that. Look at this rising RSI, rising RSI. Let me use my MACD as well. Where's my MACD? Come on, my MACD as well. Here it is. You see? You might say, but Andrea, it's negative. No, it's not. It is negative, but it's presenting a decreasing bearish bias. So what that means? It means that bears are losing a significant half, actually lost a bias, and buyers are looking to take the control. They have already did the last 2 weeks, actually. So if I just change my settings, let me see, is this satisfying my daily chart? So, okay, it was here, slow down, 0, increase, bam, 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 bam. It topped indeed, decline. Yes, so that satisfies much better my daily gold. And you can see that something that should have triggered your attention, it was this shift into positive territory back in the beginning, in the just a week ago, no, more than a week ago. So complying and agreeing with this rebound, turning MACD lines turned positive, RSI started to pointing higher. So that was, if you missed that, and I did miss that, to be honest. I saw the break of 200 and the move back above 1900s, but apparently there was a sign well before that, just a few days before that, 2 or 3 days before that. Nonetheless, guys, has the 15 minutes chart closed? Yes, it closed. So I'm getting back to the 15 minutes, okay, for intraday traders, for scalpers, and etc. I don't know how many of you are scalpers or not, and I want to check a bit what's going on over here. Okay, okay. Uh, Bullish candle, but with that the small body one. The tail, however, this huge tail indicated that bulls fight a lot, but bears fight even greater. So we have a positive bias, but there was a very strong bears fight as well. However, with a new session, the gold sustain and move higher with a move again above 1950. So it's keeping it, the gains are holding so far. The fast moving averages are pointing higher. Bollinger's expanded. MACD rising. Let me put the short term MACD, sorry for that. Actually, no, that's just fine. Stochastic is keep pointing higher. So everything suggests that even in the very, very short time frame, there is still further steam to the upside. There is still further steam to the upside. Interesting. Let me. It's my parabolic SAR. Yeah, I'd like to check what's going on over here as well. Okay, supported. A bit of a flip. Now still well below the. I'm gonna get rid of pivots as well, just to make this. This is quite clear. Yeah. According to ATR, ATR is at 171. 171 multiplied by 2. We have the risk and reward. That means 343. So that means a move up to. Oops, sorry. Let me measure it. 3742. Yeah, that's. Wait. close. Yeah, 15 minutes chart was already breached and broken. Nonetheless, guys, there is some intraday further rise intraday. So yeah, that's pretty much it on gold. I'm gonna shift quickly on silver, and the reason for that. And this time I'm gonna. Where's my silver? Silver, 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 silver. I can see that you keep posting questions. Okay, I can see that. Just give me a second to cover the metals, and I will be with you. Silver, silver, silver. Here we are. Silver actually posted a significant breakout since yesterday. Actually, this morning, it was in a. It was in a. Let me just make this better. Yeah, it was in a down channel which broken in the European Open. So that was the very first sign that of a further bullish bias for silver with 2485, 2755. It was already breached. It was the latest swing high back on Monday. The very next one is on yesterday, on the Wednesday's highs, 30 20 20 2490, and even greater than around 25 level. It's just over here. So there is a lot of positive bias still. Very similar pattern with gold. You can see a rising RSI. You can see a MACD turning positive. Okay, and would like to check a bit Heiken Ashi as well. I'm not using them quite often, but they are brilliant. So okay, okay. Okay, interesting. Let me put the 30 minutes chart. So we have a bit of a correction, a bit of an indecision right now. This is Haikenashi, but momentum is bullish. This is the 30-minute chart in silver. RSI is still pointing upwards. Momentum is rising. A bit of indecision, but overall consecutive bullish candles. So we wait and see whether we're gonna have so what you when you're using high Kenashi, you need to wait and see whether you're gonna get another bullish candle with no tail in the bottom like these ones. You shouldn't have a tail in the bottom. If it has a tail in the bottom, that means that we still have the risk of a reversal. So it's like a wait and see stance over here because we have one, two doji candles and a pretty doji one once again with long tail on the top, long tail on the bottom, and the price in the mid. So we need to wait for confirmation. In 4 minutes actually from now. Overall, yeah, extended, bam, 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 bam. So still the upside overall momentum remains positive. I will put the daily chart on because I want to show you what a strong, more than 2 weeks has been. Look at that, bam, 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 bam. This is a daily, bam, 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 bam. Doji yesterday, still bullish so far today. So this is just to trigger your attention tonight at the close in order to consider to add it on your watch list, obviously, and consider your next move on next week's session, let's say. But yeah, momentum is still mentals remain positive, guys. Everything has to do with the central bankers, with the speculations of the end of tightening, Okay, we supply and demand as well because the Chinese and the Chinese are keep announcing stimulus. So that is also something that is driving significantly the metals, not only gold and silver, but also the industrial data supporting it. Let me get back to your questions. Yep. You keep typing that gold is up. Yeah, keeps posting higher highs. I'm quite curious about this long tail. It looks overbought in the 50 minutes chart, but momentum is definitely keep rising and increasing bullishly. So buyers and bulls are still there. There is no indication yet for any correction. So yeah, 1952 has been breached, but it has turned to the next resistance area. Still further steam to the upside, apparently. And as I said, overall, the long term and the medium term outlook is still positive for gold. You keep up or down, I already mentioned. Can you please wipe the screen? It's already white. It's 1200 pixel multiplied by 900. Mm, can I saw that you're a YouTube user. Can you click on that button that expands further the the screen, my dear Adegule? Okay. Okay, let's get back again to gold. Uh, hmm. So, Salzat Hossein is asking whether it could breach 1962 today. And you are absolutely right. That's my 70. That's the 1962. Okay, you have added an extra Fibonacci level. You have used 76 as well. Okay, let me go down to the 1 hour chart to see what's going on. We're still a minute away from this candle. This is the hourly chart. Okay, just close, just close. Okay, Hossein, look at that. Guys, just I'm gonna put a comment. GB gold 1 hour because I don't want you to keep asking me about which time frame I am right now. 1 hour. Okay, this is my comment. This is gold 1 hour. Hossein asked me whether it will move today to 1962. So let's do this. Do this. Okay, so this is 1 hour chart. The key over here is that it broke and closed above the 2 days range. Okay, 2 days range. This is a 2 days ranging market. And that candle, which is after the data, it broke higher, it broke the range, and it closed above it. Okay, so this is indicating that bulls um, managed to break the ranging market, the last 2 days ranging market. Now, let me fix a bit over here the momentum indicators to see what. Okay, over here, what I have over here. Stochastic is overbought and it's turning a bit lower. Still, however, in the quite high. MACD, let me stretch this a bit. MACDs keep rising, so positive. This is positive. RSI is positive. Keep rising. It shows a bit of a like. It gives a hint of a potential reversal, but nothing really yet. Nothing significant yet. It's still at 70 territory, so still okay. So positive. The breakout is positive. Currently, is struggling a bit, but it still hasn't turned back to the range market. So, my dear friend Hossein, I will zoom out just to show you that if we get another decisively bullish candle within the hour, within the next few hours at least, holding gold above 1950, that could be that then the attention could turn on the 1962 or even 1970 territory, 1968, which is the 81.6 Fibonacci level. Okay, this is my reply. My reply is that it looks that there is a lot of bullish bias. It looks like bullish bias is increasing. We have the breakout. We keep having RSI rising. We have fast moving average prices pointing higher. RSI, it hasn't turned it down yet. It hasn't crossed my trend line. Stochastic is giving a bit of a signs of correction, not reversal, the need of a bit of a correction. So we need to see whether the market with the gold will sustain a move above this range, and also having in mind that even if, because it's oversold, if overbought right now, okay, overbought, uh, we might see a bit of a sideways movement at that level, a tiny pullback, just because it needs to correct it a bit before another attempt to the upside. Let me put down the the 30 minutes chart. Yeah, boom, 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 overbought, sideways, a bit of a pullback, but as long as it doesn't show a return back to the range, okay, um, remains positive. So any pullback that we might see, it might cause a lot of buying the dip situation. So any it's overbought. So you might see a bit of a pullback, but this expected to be short-lived. Short-lived because fundamentals, technicals support a positive gold. Okay, did I reply to your question? Is that clear, guys? Everyone. Oh, hi Noah from Nigeria. Expand the screen. I can't get it wider than that, I'm afraid. No, I can't. I don't know what to do. I had to get rid of rid of the navigator and the market watch. Yeah. Okay. Okay. I cannot advise what you should do, but what I can tell you is that 1952.87 remains resistance for the day, and I'm gonna use my Fibonacci's, which I put it wrongly. Where is it? Oh, and I'll say that support, immediate support, is down to 1945. Okay, 1945. So we might see a bit of a correction, we might see a bit of a sideways movement, etc. As long as the asset has not returned back into the range and it remains more precisely above 1946, the latest support that we have, it remains positive. You can see this, everything complies, everything complies. Why I'm saying that everything complies? Look at that. Parabolic SAR below price. So even if we see a pullback, it might be short, or it's expected to be short-lived. Stochastic already started to fade it. There is not a sharp slope. There's not an indication that it will get back down. MACD is positive, RSI is positive, all the moving average, including the Bollingers, keep pointing upwards. So there will be the need of a bit of a correction because if there is an overbought. But my dear Mohammed, it is what it is. Bulls are in control. So keep an eye on the flip side, on 1946, 45, and on the upside, 1952. And then if that extends further higher, is what Hossein said, is the 1962 or even 1970 territory, which express the next Fibonacci levels. Um, yeah. So let's move on. Dollar yen. Okay, what we have over here, initially dive, then rebounded away from 1940, sorry, from 144. Yield slide as data fuels bet hikes are over. That's the headline in Bloomberg. Yield slide as data bets presenting that Fed hikes are done, are over. Traders dumped Fed hikes wagers. Futures up. So what that means? What that means, guys? What that means? It means that we might see further decline on dollar, further support on gold, stocks also to the upside. So we still have some noise. So if you see the dollar index, you can see that get back to the pivot point. There is a bit of a confusion, but overall, we should see dollar lower overall on the anticipation that because yields are under pressure, futures have risen. So yeah, regardless of what the last hour, not the last hour, the last 9 minutes, this is a 9 minutes min candle presenting some rise, pressure remains to the downside. Have you seen these huge down legs on dollar index 15 minutes chart? And so nonetheless, let's get back to the dollar yen. Dollar yen down 144.43, oversold for 1, 2, 3 sessions in a row. A bit of a recovery, but overall under pressure. Let's see. Yeah, everything is MACD extended to lower well below zero, RSI below 30, stochastic posted a bit of a bullish cross, but it fails to, it doesn't show up. It's showing on the right hand side. So this implies to a limited rebound, a limited correction before another attempt to the downside. So yeah. So keep an eye on the. Let me just. Look at that. Look at that. Look at that. Okay. Look at that. So this is dollar yen, right? Significant increase at 147. 147. 35 was it in the beginning of the week? Okay. There was a floor down to 44, 144.50 territory, which has been retested, okay, but not broken yet. So, and this is the, sorry. Here we are. So still, dollar yen, it's holding years, more than actually, years, more than years. Since it is holding the gains that we have seen since the beginning of the year. So remains at 1 year's highs. Can you see that? So we have a correction this week, but as long as the asset remains above 144 level, Okay, so I will put a line on 144. Here it is. Above 144 level, any decline in the day trader and medium term trader could indicate that it's a correction of this long term rally. Don't forget that despite of a dollar weakness, the yield differentials between Bank of Japan and Fed are huge. Okay, so we might see, regardless of dollar weakness, dollar yen to be supported. So a key level for everyone that you should look tonight or even Monday morning will be the 144. As long as the asset remains above it, there is no indication of a reversal of this 2 months rally. However, if we see a reversal back down below 144, then attention will be turned to 143, maybe 143 area, 142 50 or for 30, 142.30, and so on and so forth, then 141 level. But this is looking a bit unlikely. Okay, exactly because of the yield differentials between the two banks. Now, intraday now. Let's go down to the 30 minutes chart. Let me put my 5 and 9 exponential moving, 5 and 9 setup. So down, bam, 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 144.43. A bit of a correction here, but still, look at that, negative. Negative, trying to recover but failing. Negative, trying to point higher, but with very, very narrow, weak slope, indicating that any rebound, it would be short-lived. It would be a correction. So still, who asked? It was Kawal Wellness. Still, my dear friend, intraday, in the very short term, dollar yen remains negative. So any recovery for the time being, it looks to be a correction on this oversold condition. Okay? No, 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 just no. It's no, it's positive. It's overall positive. It's expected to has already had a great August, okay, recovering any losses, majority of August losses, fundamental support in the boost of gold. Unless if something, I don't know, in politics or something major happens, but for the time being, we have there's a pretty positive monthly and quarterly and second half of the year gold outlook, very positive one. I don't know where you're seeing the 19,000 in the 1900s there. I don't know why you're seeing something like that. Really, I don't know. Yes, we might see a correction. We might see a bit sideways movement the next few hours because it's overbought. But no, 1900s. No, it's not the case right now. 1940 will pass. It has. I think you mean 1950. Nice, Kitlo. Nice. A bit ambitious, but okay. I understand that you are a medium-term trader, so you are keeping your trades for quite a few days or even weeks. If that's the case, there. Just as long as you have done an appropriate risk management. Euro CAD, yes, you are absolutely right. Euro CAD, we haven't seen CAD. I remember someone asked about Euro dollar, but it was below Euro CAD. Okay, let's do Euro CAD then. That covers end of, yeah. Eurocat. It's many, so many of you guys. I might have a bit of a delay on replying to the questions, but it's because you're too many. You might have not seen the chat, but it's from all the social media, so you're too many. Yeah, that's why I'm a bit late. Eurocat, with the Canadian economy slowing down, but Eurozone in a bit worse situation than Canada for sure. Euro, what is Eurocat? Eurocat. Okay, we have is the Eurocat 1 hour chart. Here we are. I'm gonna just okay. What we have over here, we have a strong rebound. So that means Canadian weakness, Canadian dollars weakness against the euro. So right now it's at a key pivotal level because it's at the mid of today's range, isn't it? Yeah, it is. So not today, sorry. Since the peak that we have seen on the on yesterday, so it's at the peak and at the mid. So let me zoom in a bit. So can you see this area over here? This is not only the mid of the down leg that we have seen from week's highs, but also is the 20 period moving average in the 4 hour chart. So there we need some confirmation over here. We need to see whether it will breach and break that level or not. If this is a 4 hour session, if it breach and break it and close above it, that could open the doors higher to 147 to 147.90, even 148 level. But it's struggling to break that level. If you consider that the Canadian economy is still way too solid than the European one, this rebound might be short-lived. So yeah, it might be short-lived. So yeah, momentum. This is the 1 hour chart. Momentum remains negative. RSI flattened below 65. Okay, there is still some buying pressure, but yeah. Keep an eye on the blue line that I've drawn. This will give you an indication whether Eurocap will extend further to the upside or whether it will get back down. Um, in general, I'll put the daily chart on. You can see that the asset has been consolidating for the whole August. But I would like you to focus on the last two daily candles, right? This is yesterday's session and this is today's session. Yesterday's session was massive, was huge, adding concerns on a retest, on a return of Eurocat back down. So we still are overall in a consolidation and sideways movement, but today's candle might clarify whether it will remain in this range in market that we have seen for the whole August, or whether it will extend and it will increase the scenarios for further downside move. Nonetheless, as I said, we are got here. We had a nice decisive rebound, but still a very important intraday resistance. As long as the asset fails to break it, um, there is no indication of further move to the upside for Eurocat. Okay, so keep an eye and monitor this resistance level. If it fails to extend higher and keeps hovering below it, you need to wait and see whether you will have a breakout above it. On the flip side, if the asset returns at 146.80, then that will trigger the attention to the downside and confirm that Euro CAD remains on the back foot. Euro, okay, Euro yen and Euro pound. Let's move on to Euro yen. Euro yen. Euro yen. Remember, okay, holding the 157 level. 157 is the round number, coincides with the daily Bollinger Bands, the lower territory of Bollinger Bands, and a bit higher than the latest swing high. So a better support area is at 156.60 over here. 166.50, 50 that would be. Okay. So I have two immediate support levels over here, 157, 156.50. Okay. To the upside, that is 159.75. Okay. Okay. So we have some pullbacks, but still holding the gains of the gains of the whole year. So let me zoom out down to the 4-hour chart and look at that. So the range up, down, up, down, up, down. So momentum is turning lower. Stochastic up. Let's see, guys. That is still a further steam to the downside for Euro Yen. Flattening a bit. So yeah, it has been. Yeah, we have seen the last 2 days like in a decisive decline for Euro Yen. So right now it found the floor at 157. So with Bollingers and my fast moving average flattening, so that could indicate some sideways movement for now. So dear Omoru, keep an eye 157. If we have a confirmed breakout of 157, then the next support levels for Euro Yen is at 156.50 and even lower, 156.30, or even 3rd of August bottom on 155.50. But we need to see a confirmed decisive decline below 157. On the flip side, the resistance holds at 158 level. Okay, 158. Yeah. But overall, there is a lot of pressure. A lot of pressure for Euro Yen. RSI is at 50, MACD declined significantly, stochastic still pointing lower. So yeah, it is what it is. Keep an eye on those two levels. Euro pound. Euro pound. Okay, this is the daily chart. Okay, just here we are. Okay, what we're having over here. Oops. So in general, you should know that euro and pound have significantly declined the last 2 days, right? So we have seen both. Sorry, not decline. I was running out of steam. So as I was saying, the euro and pound in general have significantly impacted by the data because there is there is the ongoing expectations, let's say, that um, that ECB and Bank of England will rein their tightening expectations. Okay, so that is something that is keeping euro and pound, it kept at least euro and pound in a correction mode. No, now in regards to the euro pound in general, we have seen a pullback. Here we are, a pullback. Okay, with yesterday's candle having no tail lower, so that is presenting a significant selling pressure. Okay, significant selling pressure. However, the session so far has been positive for euro pound, but still the asset is like hovering between 38.2 and 50 period moving average. So look at that. So today's session will be quite key because it could confirm the reversal of the euro pound. So keep an eye on this area, and let me zoom in to see what's going on intraday. So this is the 1 hour chart. As you can see, tumbling with between the 50 and 32, as I said earlier. However, it's keep posting. Look at that. Look at that. That's nice. That's nice actually. Look at that. It's keep posting. It's actually keep posting lower highs and lower lows. You've seen a down channel since Wednesday. There is a boost. There was a boost to the upside prior and post the data, but it's still within the channel. Within the area that they draw below the 38.2 Fibonacci level. So that we could see another lower high over here with a pullback down to 0.8530 or even lower at the lows of 0.80 territory. Okay, um, so what I'm trying to say is that euro pound is under pressure overall, with the last 2 hours recovery to expected to be short-lived. Okay. What else? What else? Next question. Cable, cable, cable remains under pressure overall. As long as it remains below 128 a level, um, it remains under pressure. Let me see what's going on intraday. Trying to recover some of the losses that we have seen yesterday. Didn't manage though to reverse significant the losses that we have seen since yesterday. Is at just a breath below 127, a bit sideways, consolidating for 1, 2, 3, 4, 5, 6 sessions in a row. So pretty flat, pretty flat. Let me check the 30 minutes chart, and I'll put my 5 and 9 exponential moving average. Yeah, sideways, 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 sideways. On the data, it tried to boost higher, but returned back to pivot point with intraday momentum flatten. Look at that, flat, very close to zero, a very narrow stochastic slope as well. Yeah, it's a bit sideways. It's a bit sideways, and there is a bit of indecisive momentum over here. It was a huge tail up on the data, but then a huge tail down afterwards. So sideways, I'm afraid, Noah. But have in mind that overall, the daily chart remains under pressure, especially ahead of the next meetings from both Bank of England and Fed. Another question. Any question? Yeah. So one, two, three, four. So dollar remains to the downside, remains below its pivot, under pressure. We have cover euro cat. Dollar Swiss. Okay, dollar Swiss. Dollar Swiss. In a sell-off, we have the Swiss inflation actually as well earlier, holding steady and slightly higher than expected. So adding to the concerns in regards to the inflation in the Swiss, but not only so in the eurozone as such. So. So what is it as a yeah pretty much the combination of higher than expected, slightly higher at least Swiss inflation and a pretty weak dollar extend the dollar Swiss lower and safe haven as well. So pretty big 30 minutes candle. So attention could turn to the previous resistance that now has turned into support, the 0.8787. This is the intraday and the very, very immediate support level. Yeah. Core inflation fell down. That could help to limit the pressure on the CMB Swiss bank to hike rates again. But if indeed CMB, the Swiss bank, increase rates while Fed doesn't, that means further decline for dollar Swiss. Have this in mind, please. Oh, okay. So we have just covered euro pound, Babaso. Anyway, as soon as I end the session, you can drag and drop your cursor and you can check my analysis on euro pound. Last but not least is antipodians, risk sensitive assets, as you already know. Okay, I have Aussie over here. And I wanted to show you. This is the daily chart with Hakenashi, but I would like to show you this rebound. Something is going on. Sentiment is changing. This week's session has managed to retest several times and even break last week's highs, and it posted a greater and it holds gains as well. So there is a change of the sentiment. So keep that in mind ahead of the new week. Keep that in mind because we might see a reversal and a long-term reversal. Okay, I'm not referring to the next few hours. I'm referring to the next few weeks or even days or even weeks. So just a bit of an alert that antipodians is changing. Aussie looks to change. Something to add on your monitor list, something to think about, food for thought. Still a lot of pressure, but there is a nice rebound over here, which we are waiting to more. We keep monitoring until we have a solid confirmation whether we might have the beginning of a new trend. Now intraday, what we have over here, up, another 24 minutes to go until the end of this candle. Let me put the 30 minutes chart. Up, no tail. So there is further steam to the upside in the very, very short time frame for Aussie, with not 65.20 remains the key resistance level for the next few minutes or at the top of the hour. Kiwi should show the same performance. So Aussie is positive intraday. Keep an eye on the previous high, 65.20. Let me quickly scan through Kiwi. Yeah, that's a 30 minutes chart on Kiwi, Diargarti. So you see positive high okay, sideways, some sideways indecision initially, but the last few hours we've seen Kiwi extending higher. This is risk sensitive, this is antipodians. That's why we've seen this reaction. Broken the previous swing high, extended higher, no tails on the bottom, so it is what it is. Guys, I will close the session. It's been more than an hour. Anyway, the recording stays there, so you can drag and drop and check my analysis for gold, euro, pound, euro, Oz, euro, yen, cable, silver, Aussie, Kiwi, and etc. So we keep having, just to sum up, a weak dollar, a pressure on the dollar. As I can see, yields, the long-term ones are under pressure, but the short-term ones is it's positive. Future the indices are supported, a bit of a pullback, but hold week's gains. I'm referring to Dow Jones, Nasdaq, S&P 500, etc. Gold, the same, supported, a bit of a correction, but it looks to be short-lived, at least until at least something happens out of the blue. But yeah, it is what it is. Yeah, so I'm gonna call it a day. Thank you very much for joining us. Wages cool, unemployment rate rises, Fed should pause and end up its tightening circle, dollar under pressure. Okay, thank you very much. Have a great day ahead. Take care. There are some very interesting moves over there that you should put your watch list, not only for now, but also at the end of today's sessions in order to do your homework ahead of the new week. Thank you. Take care.